Thank you very much, David. So now we're going to go on to the questions. So we're going to start with a question from Mohammed El Naga. What will be the role? I think it's ECAs he's talking about here. What will be the role of ECAs to protect exporters and their financial providers in this pandemic crisis? So David, I'm just going to get you on. Over to you.
Right. Well, thank you for all the questions. And thank you, Mr. El Nackar, for this particular one. This is a very topical question, which I'll be brief with. And this is related to the fact, and as in 2009, people looked to have support from their export credit agencies. And I think it's an excellent reaction. The difficulties, however, will be about how to translate this and how to find proper delivery mechanisms. And in some countries, where there are existing export credit agencies that are well attuned to delivering solutions directly, that helps, like in Denmark. In other countries, like the UK, where export credit relationships are done with private sector insurers and the state is not involved, it's harder. So all one would say is that this is, I know there's a question which the European Commission have just launched, which is due for response today, asking for views on this. And recall from 2009, it was something that was a very hot issue, and each country has had previous experience of how to resolve that. Okay.
Thank you, David. So another question from Anurag. A number of insurance policies have the force majeure clause whereby the underwriter will not need to pay. Does the COVID-19 pandemic fall under this clause, thereby making it difficult to claim under insurance policies?
That is a very difficult question to answer without actually seeing what the policy says and what the underlying contract says. It's a vexed issue, and I know that Ash may well want to make some comment on from a legal perspective. But like many other questions that you come across in insurance, you have to rely on having a properly drafted contract, which provides a properly drafted insurance contract, which sits on top of a clear loan agreement or contract. And that is all one can say. There's too many variables to be able to give an answer that would be anything other than misleading.
Thanks, David. A question from Celia. David, in how far could it help that multi-line insurers are diversified, i.e. less vulnerable to a credit crisis? Do you think that there are other risk classes such as life or property or casualty less concerned by COVID-19? And so insurers, will they be better to go through this crisis, or do you think that the virus has also a large impact in these other insurance business areas?
Celia, thank you for the question. I think, first of all, one must stress that the insurance business, which is a huge global business, is divided into two components, to life and non-life business. The life business is separate and is run more like an investment management business. So it's got the right kind of approach to keep funds aside. It will, of course, be affected by the massive decreases in stock market prices, which affect the pension liabilities. But it's not the area that we deal with all the time, and has always been, I think, well regulated. The non-life business is equally huge and wide, and all one can say here is that that's a sector where the financial risk business is, and it's a small part of it. But nonetheless, this is a business that can put up 10, 20, 30 billion dollars of claims for natural hazards, and it's geared up to that. It's geared up to sharing the risk through co-insurance and reinsurance, and to date, it has had an excellent track record of responding to large-scale natural catastrophes. And as I mentioned in my talk, in the financial sector, it has had an excellent record in dealing with the 2009. The diversification of these general property casualty insurers is generally seen by banks in particular as a positive, and certainly by regulators who take this into account, because it's a rational approach that when you look at actuarial exposures, you would expect there to be a non-correlated benefit from different classes. So I think your question is essentially that the size of the capital base and the past performance of these insurers leaves one in really comfortable that they're dealing with the right sort of people. There are questions raised at the moment about reinsurers, but these again, I think, will be seen to be well-capitalized businesses that have been through problems in the past and are established with long track records.
Thanks very much, David. Ian Gunn from PIB, it's more a comment. We've already had confirmation from one insurer that they do not regard COVID-19 as a natural disaster or force majeure event, but have covenanted that contractual terms will need to be considered in the context of any claim. We've also had Pradeep saying, I understand that the insurer's appetites will change, leading to adverse change in risk premium paid by exporters. He'd also like to understand how it impacts the trade finance companies, factors, etc. But I'm going to get you to take that one offline, and we'll do that in a written Q&A after, just in the interest of time. Because what I want to do now is do a quick poll to the audience. There are 299 of you currently on this webinar, so I will launch this poll. It's a couple of questions. So first of all, what use do you make of trade credit insurance? None, private market only, private marketing, ECAs only, other or not applicable at the end. And then just on to the next question. What are your immediate concerns with regard to trade credit insurance? Is it clarity from insurers on positions on cover availability and appetite, responsiveness to requests for payment extensions on existing exposures, potential withdrawals of future cover, the ability to seek alternative insurance options, responsiveness and clarity on claims procedures, or ensuring full compliance with the terms and conditions of the policy and eliminate any risk of invalidating it. So whilst we wait there, if anybody is dialed into this call or watching us on YouTube, please go to tradefinanceglobal.com/tradecast. You'll be able to answer all of these questions via our Google form, but the more data we can collect on this, the better, because ITFA and TFG will be producing a report afterwards. Okay, so I'm going to end the poll now and show the results. So David, over to you. And I guess on question one, the majority of people look at making use of trade credit insurance through private market and ECAs, not just one exclusively. And it appears as though the immediate concerns are around clarity from insurers on the positions, on cover availability and appetite, and also potential withdrawals on future cover. Do you have any comments or thoughts on this?
Yes, I think it's reassuring that we're dealing with a community that largely is using a wide range of both sectors, both private and public sector, which is generally our experience in our client base. I think that I'm not surprised about the clarity response with clarity and potential withdrawals of future cover, because in my view, I hesitated when answering my own questions as to which one was more important. I think that those two are the key issues. The messages. One person has asked a question about communicating and responsible behaviour from insureds, from clients. What about insurers' responsible behaviour? And I would just say, in passing to that absolutely, we look to how our insurers are going to behave, and we expect them. And to date, they have been, especially the trade credit insurers like Tradius, who were quick to issue commentary and reassurance on flexibility, Euler Hermes, who've been providing seminars, and obviously COFAS as well. These three insurers are, I think, mindful of the fact that their behavior in 2009 was seen as a knee-jerk reaction to cancel cover, and they're at pains to show their reputation as taking things carefully. But there will be difficult moments because they have massive exposures across all sectors. And anyway, all I would say is yes, clarity is definitely something you expect. And a final brief plug that you do need to if you've got a broker, you need to make them work hard. This is the time. Okay.
Thank you very much, David. We have one more question from Christian Grapp again, and I'm going to ask David Neckar to answer this. So in France, banks reschedule short and medium-term loans to companies, and the state guarantees 90% of more than 300 billion, in the case of BPI France, in bank loans, which can amount to up to 25% of the company's turnover.
Christian, this is part of this is an interesting question because it's part of a huge movement that's going on within the public sector. I mentioned briefly earlier on that the European Commission have asked for a response to something that they have, a consultation they've just issued, which is due in today, about the credit insurance market. And this is typically what we saw in 2009 as well. Only in this case, the actions are faster. They're delivered directly to the banking sector. And BPI is the sort of successor of what used to be called COFAS. And it's impressive that they were able to swing this into action. I think that for trade credit, which is more where I feel your question is is relevant to our communities here, is there will be people saying, well, if my credit insurer is not able to provide cover because the limits aren't enough, or they're not able to actually grant a limit, what should I do? And I think it's reassuring that the Commission has already started to kick that off. And I believe there are already, I think in Denmark and Germany, other places, there are initiatives which are going to support businesses. And it's not so much the banks themselves. I think it's also the SMEs that themselves who depend upon trade credit insurance, receivables insurance, to have some degree of certainty. But it is not a simple matter. We had this in the UK in 2009, and it's because there's a complex set of relationships. They can't just deliver a guarantee just like that. It's a little easier when you can go to a bank and the banking market is readily available. But watch this space, because I think they will have to do and learn the lessons of 2009, find quick and effective solutions to provide backup through probably reinsuring private sector credit insurers to give maintain cover or give new cover to businesses trading globally in these very uncertain times.